Welcome to the ROI Masterclass, the podcast where vision meets strategy and bold moves create measurable results. I'm Liat Siegel, interior designer and ROI strategist with 17 years of experience. I help businesses transform properties and ideas into high-performing assets. This show is specifically for real estate investors, hospitality operators, and boutique developers who aren't afraid to take risks, challenge the status quo, and demand a return on every decision they make. Each and every week, we talk with innovators and leaders across industries about the strategies and the insights and really all the unconventional thinking that turns potential into profit every single time. If you believe that smart design, decisive leadership, and strategic risk are the keys to real ROI, you're in the exact right place. Let's dive in. Today's guest is a real estate and prop tech operator working at the intersection of institutional capital and emerging infrastructure. Through AVKI, he's been building a tokenization platform designed not for hype, but for the way real estate capital actually moves. After multiple pivots, his team learned what most founders only discovered the hard way. Real innovation isn't just about building powerful technology. It's about aligning that technology how investors already deploy capital. Today, AVKI works with family offices, RIAs, hedge funds, and institutions that are actively writing checks into illiquid real estate and looking for a better way to do it. This conversation isn't about the future in theory. It's about the infrastructure shift already happening beneath the surface of commercial real estate. Alex Bell, thank you so much for joining us today. I am stoked for this conversation. Technology is at the forefront of everything that's happening. The tremors that are happening in innovation in the marketplace. Please share with us your story, your background, and what you do for those who are maybe technology illiterate. I'm not one of those people, but for those who are, please share your genius with us.
Thank you so much for having me. I love being here. I'll tell you a little bit about, what AVKI is. We provide white label infrastructure for digital asset distribution. So we're essentially building the operating system for the $3.5 trillion private real estate market. We allow financial institutions to offer high yield real estate products to their clients without the operational burden of managing the properties themselves. So they own the customer relationship and we handle the legal enforcement, settlement, and lifecycle management. A little bit about my background. I got into the industry relatively young, worked with my parents as an intern at Cushman & Wakefield from the age of 12. So I was the youngest person in the Atlanta office, for the longest, and then kind of continued my journey in commercial real estate, was always adjacent to it, followed my parents to whichever brokerages they were at, and then eventually set out to pursue solving my own problems within the industry with the experience that I've had, going through university and, talking to other founders and investors and seeing that deals were dying, regularly due to capital formation problems and the lengthy processes. I've seen billions of dollars of deals just fall apart just because the timeline was too long or the capital and the interest rates just weren't in alignment. So when you see a good deal, you should be able to execute then and there if you have the capital, you have the means, and you've already done your due diligence. But sometimes it's just not that simple.
You help ensure that process continues and happens and that capital gets deployed. Is that right?
Correct. So what we're focused on is access and liquidity. We, prioritize institutional trust. We're choosing a slower path with bank partners over a faster path with more of a crypto native retail launch, primarily because what we're building is the underlying infrastructure that is effectively going to disrupt the commercial real estate industry and how transactions operate. So our primary focus is ensuring that the transaction can become as seamless as possible. If things can happen just as easy, considering everything else is instantaneous, you can open up your Robinhood app or something like that and, buy a stock, but you can't open up Robinhood and buy a share of the building that, the Robinhood office leases. I see a problem with that. You're not able to access one of the biggest asset classes in the world just because of how much capital is required for entry, how much time it takes to operate within it, and it just becomes a massive barrier to entry for many. So we believe that the access will kind of expand as a waterfall effect of institutions adopting the technology first and then going on to the middle market, and then everyday people like me and you can also have access to commercial real estate. But it's a journey that'll take its own time.
Walk us through what traditionally happens now and the way that it should be working, especially with the technology that you guys have built.
So as it stands right now, access to commercial real estate, you are either an individual investor or you join a syndication. With any of those, you're locked in for 7 to 10 years, waiting for your exit at the end of the hold period. You have 6 to 7 figure minimums, to get in 100K to over a million just to get into the deal itself. And then the processing time is, anywhere between 90 and 120 days just to close the deal, sometimes even longer. It's not, irregular for a deal to take, 6 to 9 months to close. And that becomes, problematic. You look at a really nice deal and then by the end of it, the interest rates have changed. So your loan is different, all of those things. Or maybe you were buying cash, but because the deal took so long, they got a better offer somewhere else or something of that nature. But when you look at what happens in, traditional capital markets, if you look at like the stock market, for example, a lot of your alpha, a lot of your benefit lies upon the immediate execution of whatever knowledge or like insight you might have. And considering the slowness of this asset class, I think there's a lot of potential for it to speed up. So I hope that answers your question. I'm not sure if I hit all the marks, but I think that touches what I intended to say.
I would love to hear a specific example of a deal you've seen fall apart and how, without maybe giving too much details, but how that's fallen apart, what specifically pulled at the threads, and how specifically your technology, what that would look like step by step, as if it was like a real life or in real life example.
I think a great example of a deal falling apart was that with my parents. So we were looking at a deal in Brunswick, Georgia, with the developer, and we found like the perfect plot of land for them. They were really excited to, execute on it. And they had all their ducks in a row, so to speak. But on the seller's side, there were, a couple issues with the financing and everything. And then on the municipality, and things just couldn't get approved in time. And by the time things would have gotten approved, for an acquisition and like the approval for the land disturbance and whatnot, the capital disappeared. They weren't able to have the same terms, which meant to them that they would have to renegotiate or find a different lender in order to develop the property. And all of this has happened before any ground broke. They hadn't made a sale on the land itself. They hadn't started any sort of construction. They started drafting up like site plans and all that stuff. But ultimately, the developer ended up missing out on an amazing opportunity and they're still kicking themselves for it. However, with something like AVKI in the mix, you're able to speed up both sides. You have the seller participating and they understand, okay, I can get all of my money almost upfront in cash instantaneously. All we have to do is like upload all the data regarding the property, the deed and whatnot. All the stuff gets transferred. And then as soon as, just click a few buttons, have a few signatures come through, and then it happens, it could happen in as little as 21 days versus the 90 to 120. And that's 6-time reduction in speed. That changes a lot for a lot of deals. I think a great application of AVKI's technology that we started to see a lot more is in public-private, sort of context where you might have something like a golf course, that is owned by a local municipality or something of the nature. But because there's a conflict of interest in terms of what the land could be used for, because, fundamentally a golf course is considered a waste of land if you want to develop, more housing or something like that. And that's your initiative within the city. But, there's still regular users of that golf course. So imagine a scenario in which the public could effectively kind of crowdfund the purchase of that property, have their own pro rata share of the golf course, which removes the burden from whichever public municipality was previously owning it. And then they can continue to utilize the land, how they intended to use it without conflicting with the municipality's directives and initiatives regarding how that land should be used. Because at that point, it's now private land. And now you're able to have a good balance between, maintenance and all of that and like still use the golf course as a golf course without having to tear everything down, grade the land, and then, build housing on it. I think that's a great sort of use case. And there's other situations where, governance could come into play, community involvement directly in like some sort of specific development. So we're exploring, several concepts and real world use cases surrounding this. However, the bulk of what's happening in the real estate tokenization space is really just around the concept of distributing dividends. And a lot of the focus is on residential real estate. So it's exciting to be building something that's a little bit different, even though the market is relatively young.
Yeah, Absolutely. Very exciting. And it's on the cutting edge of what's possible. I think that for an industry, I know the construction industry is also very antiquated. That's, the world that I play in as well. And there's so much innovation happening. And it's really exciting when you're at the forefront of it, when you can figure out what those use cases are so that you can break down the barriers and, like you're saying, have almost instantaneous results. How do you achieve that 21 days? What are you doing with the technology that allows you to bring the seller and the buyer on and make that deal happen so much faster?
There's a couple things that happen, but basically we reorder the process that the transaction occurs in. One of the biggest thing that holds up a deal, the two biggest things that hold up a deal would be capital and then due diligence. If we can front load both parts of that, transaction, have all the due diligence, all the documentation, all the permits and all that stuff pre-approved, available for review immediately without having to go back and forth in email threads and all that stuff and wait on lawyers and all that. If everything about a property is available for view, just like clicking on like a Dropbox link almost, then you're able to see everything that you need to see in order to make a decision, weigh it against what you need to, weigh as a buyer, as a prospective tenant, whatever the situation is. You see everything without having to go back and forth and spend all this time, evaluating whether it makes sense. You can have a property and its cash flow already be underwritten and processed, and you can see without having to underwrite yourself the debt service coverage ratio, all of these things, all these factors that you would look into and take weeks on weeks and, spend a lot of time in Excel to evaluate. You're able to just look at all that instantaneously. And from there, you can make a decision because at that point, it's a no-brainer. And then on the capital formation front, for both the seller and the buyer, blockchain technology has become better infrastructure today than it was, 5 years ago, where, you have the incumbents, you have the financial institutions, your BlackRocks, your Franklin Templetons of the world, tokenizing and transacting hundreds of millions of dollars, billions of dollars are being flown in to these individual blockchains in all of these different environments. And that amount of capital moving in, not just to Bitcoin, like everybody thinks that's what is the summation of blockchain, but to all of these chains where, transactions happen faster, they can happen in less than a second and it's considered final. What happens with blockchain technology? You're able to front load both the due diligence and the capital formation processes. When you look at the deal flow, you have all of the details regarding the property, both on the seller and the buy side, everything you would need to know regarding cash flow, tenants, occupancy, et cetera, all of that data regarding the property's performance is all available for your review up front without having any sort of email back and forth or anything like that. So it's just as simple as clicking a Dropbox link. However, also on the capital side, you're able to get lending, approved instantaneously because you're an accredited investor or something like that. You're already on the platform and you have access to this. You might already have all the cash in hand, things like that. So you're able to, if you have the money in hand and you like the property, I don't see any reason why you shouldn't be able to be like, hey, here's my money. I want the property. And then all of the deeds transferred and all of the contract signing and all that happens pretty much instant in the background. As soon as you have consensus between the buyer and the seller on the price and all of that information. Now, this does get a little muddier because it's not a completely wraparound solution for every single scenario because, not all real estate is the same. So there are, cases in which things are a little bit more complicated and not as straightforward as click and buy, like you would for anything else on the internet right now. But considering how slow the existing process is, a little progress is better than no progress.
I would consider that a lot of progress. It's the equivalent of the buy now button on Amazon, I would say. And it sounds to me, correct me if I'm wrong, that you guys are kind of like this central hub where all the spokes, so to speak, of the wheel are within this platform where they can have access to the deal, to the documents, the understanding of, is this the right fit for me? And transferring the deed, that's huge. How can you get the seller already on the platform through all the due diligence? Obviously, that takes time to set up. So is it that it's kind of this membership where sellers and buyers will have all their information and their properties already within the platform ready to go for an exit strategy strategy, or like, how do you get that process? You said you front loaded it. How do you get that process done quickly? I want to understand a little bit more of that.
So in terms of data collection and onboarding and all that, that is, going to be a relatively tedious process just because not everybody's data is clean. Not everybody has everything organized in one place. Not every property manager is the best in the world. However, we take on that burden. So by the time it hits our platform and it's available to investors, they're able to look at everything in a very uniform and clean format. So as long as it might take, on our front, that's relatively irrelevant because by the time it's available for purchase, you can just click and buy now, just like you said, so to speak. So that could take a number of days, but we've gotten the process down. We've done as many as 200 and I believe 20 something properties within a portfolio that we individually, had underwritten and packaged up, did a full deal analysis and whatnot in 72 hours. So we built this AI powered underwriting engine that was extremely effective at scrubbing the data. Of course, there's a lot of human input, which is why it does take 72 hours instead of, you press a prompt and a button and all that stuff like you do with ChatGPT and whatnot. But building that engine definitely speeds up the process pretty significantly. So we were getting as much as like $250 million worth of deals, a week in our email. And you're like, okay, let's run all this through, the engine and everything, clean it up and get it all packaged up so we can start marketing it. And we were able to accomplish that, pretty seamlessly. And there's definitely room for improvement. But considering that the standard underwriting process takes, 4 or 5 weeks just working, especially for a portfolio as large as what we were dealing with, we were able to leverage, technology to speed that up, pretty significantly. So we can handle, a pretty big amount of deal flow in a short amount of time that most other people, might struggle with, until this technology becomes a little bit more widely available. But building that out was definitely the big factor in our success, especially early on.
Wow, that's huge. That's huge. So would you consider yourselves kind of this marketplace where buyers and sellers can find one another, and the sellers come to the platform saying, well, this is, I'm uploading and providing all the documentation so that the sale could be easier. And the buyers are coming onto the platform saying, this has been properly vetted and so much easier to purchase. So everybody understands, like on Amazon, right? Just dumbing it down enough so that I can, explain and share and understand. Just like Amazon, you have the sellers that come onto the platform to sell their products, and then the buyers, it's that connecting piece.
It's a good analogy, but it's not entirely accurate to call it a marketplace because, at the forefront, the marketplace model, especially with something like this, is, inherently broken because when you create a marketplace, you have to fill both the buy side and the sell side of the transaction. And then dealing with a new technology that neither side is particularly, familiar with, that introduces a lot more liability because something could go wrong on our end or the buyer's end or the seller's end. However, what we are, as of today, is a B2B2C model where we work directly with whichever institutions already have existing customer and clientele bases. So right now we're focused on working with banks and hedge funds and RIAs and, family offices where the entity itself might make the initial transaction and then through our technology distribute it to their own clients, customers, et cetera, whoever their stakeholders are. So while we do serve the same stakeholders that would be in your standard marketplace format, as of today, we are not operating as a marketplace. Like you would not go to avki.com and look through all of our opportunities in a list, click to buy now just yet. So maybe think of it more as maybe like a Bloomberg terminal, so to speak, how you can kind of just, or maybe some sort of forum, in that way, where you can see what's going on and you're able to, witness the transactions and you can inquire about certain opportunities that we do make available to the public. However, the bulk of these transactions right now in the early stages of adoption in this industry are happening a little bit more behind the scenes. Because like I said, I believe that this is going to waterfall downwards from the institution to retail. Today, retail is not ready. This is something that they cannot wrap their heads around time, technologically speaking, because they have not had access to commercial real estate forever. The closest they've gotten to access has been, investing in like the ticker realty income on the NASDAQ, getting their 25-cent dividends per share, every month or what have you. And that's changing slowly, of course, but eventually the long-term goal is for it to be accessible to, your everyday person. But that doesn't happen immediately. We have to take baby steps. So we have to work with people that have the big money, and then once they figured it out, it'll waterfall downward to be able to be boiled down to less sophisticated investors, where you can put in, $10 to $100 or something like that as, your first exposure to commercial real estate. But right now, we're operating with $1,000 minimums at the end of the distribution, cycle. So once we get to the end customer, that is the level of granularity that you can invest with. But as of today, we're primarily focused on, large scale acquisitions.
I could totally see the retail model unfolding right before me. I see the potential, and I love that what you've put together. It's incredible. In terms of the due diligence process and the underwriting process, how is the technology in terms of efficacy? Do you have to layer on top of that a human touch, that 72 hours, to ensure that everything is correct?
So there does have to be a bit of a human touch in place, just because humans tend to have made the Excel sheets that we're taking in when it comes to, your rent rolls, your T12s, et cetera, all the financial documents that are associated with the property. And the primary reason for that is because a lot of the time the data is messy. It's not super organized, and things have to be cleaned up manually in a way that artificial intelligence or like really any sort of machine learning model is not really capable of abstracting away. So that does take, a bit of human touch. In addition to that, we work with, several people who, are experts, when it comes to underwriting and whatnot. And we've trained our models to utilize, the same formulas and calculators and whatnot that the experts already use, but it still does require a little bit of human review. So we're not, offloading absolutely everything to AI. That would be, a massive risk, and, that could lead to, hallucinations, as we like to call it, which is not ideal when you're dealing with financial products in that regard. Because what we are effectively doing is turning commercial real estate into a security that would be recognized by the SEC. And in doing that, there has to be, a lot of intentionality on truth and, price discovery being accurate. So that said, there's definitely a human touch, but the models are, highly efficient once that data is cleaned up.
I want to zoom out for a minute, if I may, and look at the person behind this genius technology and talk about challenges that you have faced. You've mentioned several challenges that have brought you to where you are today. Can you talk to us about those things, your key learnings, and how that's shaped the way that you have built this technology?
I can't take all the credit for absolutely everything, but, starting this venture was no easy task, by any means. We went through a million pivots, my co-founder and I, trying to really narrow down on what the problem was and how to get to the problem. One thing I like to joke around with my friends and family is that I'm never wrong. I'm just very early. And that tends to be, the trend when it comes to things of this nature, that my intuition was not incorrect surrounding, tokenization being nascent in the world and becoming, the next kind of wave. So when we started this, at the end of 2024, that it wasn't a buzzword in the way that it is now. Now we have tokenization being talked by world leaders. We have, President and Elon Musk talking about tokenization at the World Economic Forum in Davos, and it's very interesting to see that validation when I felt like I was crazy, for, almost 2 straight years. And now that things are evolving and the technology is evolving and our platform is evolving to scale, it's very relieving seeing the validation, because it shows that, okay, we definitely, hit the nail on the head. But in terms of challenges beyond just the pivots, just getting to a position where my co-founder and I could work full time on the venture was is incredibly tedious. The primary reason for that being the fact that we're both still in undergrad. And luckily we go to a university where we have what's called a co-op program where you take, 6 months kind of leave of absence, so to speak, from university to work. But the school is incredibly, strict in regard to what you can and can't do for work. So I had to be very, very creative in terms of structuring in order to, have the green light to work full time. So, over the summer I put in hours, but there's been semesters where I'm, working 60 hours a week on the venture, but then I'm also a full-time student, so I'm getting zero sleep whatsoever. So there was a lot of energy, a lot of blood, sweat, and tears that were put into this on everyone's front, everybody that's on the team. A lot of sacrifices that had to be made to push this along. But what's important is the conviction behind it. If you have set the verdict in your mind that this is what I'm doing, this is how I'm going to accomplish it, and this is who it's going to serve, then you're able to, just by way of your own moral compass and your dedication to solving, to being on a mission to solving this problem, you're able to wake up every day excited because you're like, I need to do this because nobody else is going to do it the way that I think it needs to be done. Other people might have the same idea. I mean, real estate tokenization, fractional ownership and all that has been tossed around and experimented with for the better part of the last 8 to 9 years. But almost every entity that's done it has failed in some way or another. In fact, one of our biggest competitors just did a massive pivot because they just couldn't figure it out. And to the point where they're not even in like real estate anymore. And that is incredibly insightful as to how challenging the situation truly is. But in any case, I think that we might be on the cusp of figuring something out and validating that it's real. We just signed our first enterprise client recently, and that is validation. We were in bedrooms brainstorming on whiteboards, notepads, and all that. And now we're in boardrooms, signing contracts. So it's definitely been a journey, and I could not have done it alone, but it's definitely the most exciting thing that I've come across today.
That's amazing. It takes such tenacity and grit to be in school and also doing what you're doing. Do you feel that you have been underestimated along the way? I know that you mentioned that at some point. And how do you get the buy-in from these deals to sign the contracts at such an early stage?
For sure, definitely underestimated. I'd say even by people at the university, the people that are supposed to be, my champions and whatnot. But it really just comes from not taking no for an answer. One no is probably just like a not right now, or like, I need to see you prove yourself first. And I've been dedicated enough to solving this problem that just because one person said no doesn't mean that there's not 8 billion other people on this planet that might say yes. So when it comes to establishing the credibility, two 20-year-olds, building this infrastructure is definitely like kind of a big, like, what's going on here, a little bit of a question mark for the financial institutions. However, that's what the rest of the team is for. So in order to get buy-in from the institutions, you have to get buy-in from senior leadership, people that might be adjacent to you. So what we had to do was we had to make a lot of people believe. So like means going to conferences, getting our faces out there, talking to people, really selling our idea. And then we were able to, have people with 25, 30 plus years of experience join our team. We have a head of capital market that was ex Bank of America, ex Wells Fargo. He was popping just before 2008 and all that stuff. He was doing mortgage lending and all that stuff. So he's familiar with the ecosystem. He knows how to talk to banks and he's knowledgeable enough. And then he's also excited about the technology part of it as well. So there was a relationship there. Our developer team, these are people that have been actually building in digital assets for the last 7 to 9 years. And then for some, one of them even longer than that, you started off doing like cryptography and defense. You're able to see that it's really about having your story and your narrative really narrowed down in a way that is digestible and exciting. And as a CEO, it's my job to have those conversations and sell it. Make sure that everybody understands that, like, hey, this is what we're doing. This is why you should believe in us. And even if you're not the one to say yes, maybe you know someone who will. And if you don't, then it's okay. I will find someone who will, because there's no shortage of people. There's no shortage of decision makers in the world. But you never know, who you come across. I've met some of the most incredible people in the oddest situations, and they've ended up being, integral to something that I ended up working on, especially in the context of AVKI in this venture. So it's important to be able to get buy-in, because once you have people on your side, side, then that's kind of like a visual de-risking point, so to speak, where you can't be crazy because there's 50 people that are, co-signing that what you're talking about, what you're doing it makes sense. So naturally, just you think externally, like, okay, this person clearly has some sort of validation. I'll give you a shot. I'll have this conversation with you. And then from there, you're able to prove yourself and sell yourself. So it's all about sales, at the core of it all. And I wouldn't have any of that knowledge if it weren't for working in commercial real estate and in sales, from the age of 12, because I was on cold calls before my voice even dropped. So instead of Alex, they would call me Alice, thinking that I was a woman on the other line. That's just how young that I was, doing these calls. And I've gotten the experience from doing that to be able to go to any meeting and, sell it. And that's the most important thing, just having the confidence and being able to build rapport and trust within other individuals. That's how you get that buy-in, and that's how you expand, get the sale done.
Networking is literally everything, isn't it?
Absolutely.
And having people around you that believe in you. And it seems that your parents really believed in you as well and brought you in from a very young age to learn and shadow and make the cold calls. That is training, years of training that most people don't have and don't have access to. So I think it's wonderful. Like you have, I think most 20-year-olds are just getting started, right? And where you've had all this experience previously has brought you to where you are today. Your tenacity, your ability to have a crystal ball, to be able to somehow see the future and believe in something with such passion that you're willing to put in the work and believe in it when no one else is. And it's really incredible to see what you've built and the ability to get other people to also believe in what you're doing as well, so that you're just at the beginning and it's already so exciting.
Thank you. Yeah, I would not be able to do any of this if it weren't for my parents and their support and teaching me. It's definitely an opportunity that most people do not have, but, didn't grow up with many resources. But one thing that is mostly free is knowledge, and they were able to instill that within me. So for that, I am eternally grateful. I don't think I'd be here, doing any of what I'm doing if it weren't for that.
Absolutely. Absolutely. So if you had you do apparently have a crystal ball, but tell us what's in the future for your company and what are you seeing in the next 3, 5 to 10 years? I'm so interested to know.
Even the concept of looking out, 3, 5, 10 years down the line is relatively new to me, but I definitely see a world where commercial real estate is accessible and as liquid as the stock market is. And I think that's going to happen maybe even sooner than, I'm projecting. Like a lot of the times that I give the projections, it's very conservative in nature, but it could happen, within the next 3 to 5 years, and being completely genuine. My conservative projections are, around 10 years from now, I see something like that really evolving, because it is a massive market. There's a lot of capital that would have to, exchange hands and all of that in order for something like this to happen. But the future is definitely tokenization. You've heard it as a buzzword. Do a deep dive. You'll see, everybody from Larry Fink, over at BlackRock, everyday people talking about tokenization everywhere. And that core technology, the ability to bring something from the real world onto the blockchain, that is definitely the future, when it comes to how financial services and asset management and whatnot will interact with the world. We're starting to see, everything from our dollars, be digitized to our buildings, our stocks, all of that, treasury, T-bills, all of that stuff. So I think it's just a matter of implementation over the next couple of years. I'm starting to see where we can apply this, who can figure it out, but what can we do to expand the adoption of this technology? And it's all incredibly exciting just to see that direction that everything is moving in, because it's all moving at light speed. Like they're calling 2026 the year of tokenization, and we're starting to see, so much money be moved in. The Solana blockchain just crossed over $1 billion in real world assets on chain. You're starting to see Franklin Templeton tokenize their treasuries $800 million at a time. We're starting to see, initiatives that are putting in, starting as their first tranche, over $500 million put into the adoption of this tech. So I think we're going to start seeing a lot more balance sheets be moved into the blockchain and a lot more emphasis on, okay, how do we make sure that these things can be enforced off chain? What are the legal and compliance sort of tactics that we're going to use to ensure that everything that we're doing is both legally and technically enforceable, so that nobody's money is disappearing in the real world. Let's assume a worst case scenario where there is some sort of security breach and you lose your 2% of a building or something like that on chain. It's not like that 2% of the building is disappearing in the real world too, just because that was lost or destroyed or exchanged hands. So ensuring that there's a way for the blockchain to act more of like a mirror, while the legal record still retains master kind of status or what have you, as the like sole kind of oracle of truth. I think that's the most important thing, that adoption in insurance, that compliance is automated, things like that. I think that's the direction that everything's going. It's exciting.
Fantastic. So exciting. I can't wait to see and witness where things go. You're just getting started and so much already has unfolded for you. If our audience wants to get in touch with you, how can they do that?
Yeah, LinkedIn, that's a great place. Search Alex Bell, AVKI. You can go to the website or just Google AVKI. It's just the 4 letters AVKI. You Google that, you'll see us, and you'll start to see some pretty nice news headlines pop up sooner than later. So excited to announce
Amazing.
everything. And yeah.
Amazing. Alex Bell, thank you so much for joining us today. What a pleasure.
Thank you.